Hello, friends. I'm Mahesh Patil, the co-CIO of Birla Sun Life Asset Management Company. Today, we'll be talking about the difference between large cap funds, mid cap funds, small cap funds. The large cap funds are funds which primarily focus on large cap stocks. When you talk about large cap stocks, they represent the top 100 companies by market capitalization. These are typically blue chip companies, companies which have are market leaders in their segments, and they spread across various sectors. Some of these companies could be also large multinational global companies, and by nature, large cap companies are companies which are well established and have a very strong positioning in their particular sector, and they provide stability to the portfolio. The mid-cap fund are funds which primarily invest into mid-cap stocks. And how do we define mid-cap stocks? Mid-cap stocks are companies which range of 100, beyond the large caps. The next 150 stocks are defined as the mid-cap stocks. And typically, the market capital, the minimum market cap of a mid-cap stock would be around 30,000 crores. The mid-cap companies, again, are companies which are reasonable in size. They are not really large companies which are already established, and they would vary across sectors. What we see is that the mid-cap companies are mainly dependent on the domestic economy. Growth and this thing is to a large extent depending on how the domestic economy grows. The small cap fund, again, as the name suggests, it invests primarily into the small cap names. And these are companies which are now beyond the top 250 companies. So it's a vast universe of companies which is here. And here you will find companies which are typically with market capitalization, which is lower than 10,000 crores. In the small cap space, since there are a lot of new and emerging companies which are coming up, many ideas which one needs to really sieve through before one really invests and builds in the portfolio. So I would say that the small cap universe is a company which are either emerging companies, companies which are in sectors, okay, which are still not as big. The chances of companies failing in this sector is much larger. So one has to be more careful while investing into the small cap space, and that's why it's important to really focus on companies which are having a sound balance sheet, a sound business model, and most of these, majority of the small cap and mid cap companies are companies which are more promoter driven. Sometimes they wouldn't have a professional management, so it's important to really bet on the management, the competency of the management or the promoter, I would say, how their governance standards are. That goes a long way in terms of how these companies perform. The large cap companies, since they are well established, their business models are well established, and they would normally be leaders in their segment, are much more stable. Companies would probably, their risk associated with the company would be more linked to the business cycle risk of a particular sector. But otherwise, their business models are very, very well established. The mid-cap space is a sector which is typically between the large caps and the small caps. Here, these companies have achieved a certain scale and size, but they are not as big as the large cap names. And some of the better companies in the mid-cap space would become large caps. But again, in the mid-caps sector, one has to be a bit careful because the volatility is slightly higher than the large cap. These are companies which are still trying to establish their position in a particular category or a particular sector. And here too, we've seen in the mid-cap space, some of the companies are managed by professionals. Most of them would still be managed by promoters. And the promoter, quality of the promoters, the integrity is very important. So there would be slightly more riskier than the large cap names in that sense. The small cap segment is a segment, as I mentioned earlier. Here you will have plethora of companies. Many companies try to come with IPOs. They would typically be in the small cap space. Companies which are able to really grow and scale up their business would move into the mid cap space. This sector is slightly more risk prone because there are many new companies which come into this space. Some of these companies will be able to grow. Other companies might not be able to, and we see a lot of casualties in the small cap sector. So one has to really tread very cautiously in this space. A lot of the small cap companies might not be well covered or well researched by the sell side or the broking houses. And that's where the important that while investing into these companies, one does a proper thorough research in terms of the management, in terms of the business, and then take a call to invest. Because as I said, the success rate in the small cap sector is much lower. And to that extent, the volatility and the liquidity also in the small cap sector is much low. And so I think I would say that in terms of risk profile, the large cap probably would be the bottom. Okay, then the risk increases as you move towards the mid cap sector, and then it becomes higher as you move into the small cap stocks, both in terms of their volatility and in terms of liquidity, and also in terms of the management quality and management stability. So investors who are looking to invest in the well-established blue chip companies should look at a large cap fund that provides a stability to the portfolio. Investors which have got a slightly higher risk appetite and want to look at companies which are potentially which could become large caps should look at investing into the mid cap space. Investors which are willing to take a slightly higher risk and willing to explore more can look at the small cap space, where the chances of getting the multi-baggers is much higher. You should also understand the risk associated with that, because in a market downturn, we see that the small caps tend to correct much more, followed by mid caps and followed by large caps. So I think understanding the risk and reward is important for investors before they choose to invest, whether to choose a large cap fund, a mid cap fund, or a small cap fund. We have seen that in the last 2 years, in calendar year 18 and 19, the large caps did well. Since Jan 18, there's been a severe correction in the mid and small cap space, and that was primarily driven by the problems in the domestic economy. But as we come out and look into this calendar year and coming out of this COVID crisis, we have seen a good recovery back into our economy. And with the reforms what have been done, there is a strong potential for domestic growth, domestic GDP growth to revive and go back to around 6.5%, 7% going forward. And we are seeing now multiple sectors recovering, and the outlook for most of the sectors is looking good. In this context, we are seeing now a broad basing of the market. When I say broad basing, means now many companies are participating in this, the return, the sharp rebound in the market, what we are seeing. And in that environment, the mid cap and the small cap stocks are likely to do much better than what they have done in the last 2 to 3 years. Also, we've seen that the mid caps and small caps have underperformed the large caps since 2018. And to that extent, there is enough headroom for these stocks to rebound as the market recovers from here and scale new highs, and domestic economy recovers from here. So I would say that over the next 2 to 3 years, while large caps will do well in line with the market, provide a lot of stability, but the mid caps and the small caps have a potential to outperform on the back of strong recovery in our domestic economy. Pitfalls in the small cap space would be larger, so one has to be careful in terms of stock selection over there. Betting on the right company, the right business model, the right management would be critical in terms of getting the winners in the small cap sector.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.